Hello, everyone. Once again, this is Black Forex. We're coming to you with another market analysis video. We're going to be looking at the US dollar and taking a hard look at that and analyzing it to see what's going to be going on with it going into this trading weeks and the next several trading weeks to come. Okay, but now that we got that said, we have to state that this video is for educational purposes only. This is not financial advice, but we all know why you guys are here. You guys are here to try to help improve your abilities as a trader with Forex and to help try to put some extra money in your pocket during these inflationary times. Okay. So with that being said, let's go ahead and dive into this US dollar breakdown. Okay. Now, before we get to breaking down the technical analysis of what's going on with the US dollar, let us talk about some of the fundamentals that is affecting the US dollar. Okay. First thing and foremost, we have to discuss inflation. Okay. Inflation is taking a heavy toll on the US dollar. Okay. It's not been doing so well due to what's going on with inflation. So we have two ways that this can go about. If the increase in the interest rate and economic policies and measures that's placed in face by the American Federal Reserve and also by the U.S. government is tackling inflation very aggressively or expeditiously, then we will see an increase in the U.S. dollar. Okay. If the economic measures and policies that's been placed by the Feds and by the American government does not combat the inflation very effectively or expeditiously, we will start to see a continuation in the devaluing of the US dollar, where price will continue to drop. Okay. Now, also, one thing that's also affecting the dollar's value too, and it's almost like a non-traditional effect, is oil prices. Okay. Now, traditionally, oil prices affect the Canadian dollar due to one of Canada's major exports is oil. But we are in a situation where the oil prices is starting to affect the US dollar due to the overall and dark cloud of inflation hanging over the economy, okay? Because as what's solely driving inflation in America right now is gas and oil prices. Okay, they are both increase in gas and oil prices are affecting consumers and businesses alike. Okay, consumers have to spend more money on gas, which means it has less money to spend on other goods that they may need or they may want, right? And on the other hand of that, right, the increase in oil prices, right, and gas prices causes companies and business to have to increase their it causes companies and businesses to have to put additional money into their shipping costs, whether it's through trucks or outright shipping stuff across the sea because they have to spend extra money on gas to be able to ship their goods back and forth from the factories to the stores where the consumers go and buy the goods. Now, in turn, what they're doing is offsetting their increased gas cost prices on having to ship their goods back and forth on the consumer, which is now raising the prices of goods in the stores and consumers have to not only buy gas at higher prices. Now it has to buy everyday goods at higher prices just because the companies have to make the prices higher to offset their gas costs to be able to ship these things back and forth. Okay, I know that's a mouthful, but this is exactly what's going on, and this is what's causing inflation to further spiral out of control. Okay, so basically, we're in a unique situation where if the U.S. government starts to take economic measures and policies in place to control oil, right, we can get inflation under control. Okay, but if it does, but it was really pushing oil, we'll get more deeply into this, is the Russian sanctions. Okay, but one thing that is clear is that if this inflation does not get under control, we could be in for a recession within the next 60 to 90 days in the US economy, which is going to cause our dollar to devalue very, very rapidly. Okay, so just a quick overview before we get into the technical analysis. The long as inflation increases, the dollar is going to decrease. If oil prices continue to increase, the dollar is going to decrease. If inflation starts to get combated effectively and expeditiously, then the dollar will gain strength. Okay. Also, too, if oil prices start to come down, then also the dollar will gain strength as well. Okay. We're going to make a separate video. We're going to discuss oil and all the factors that's concerning oil in another video, but we're going to just be spending this time discussing the US dollar with this one. It's just that we're now in a very unique situation where all these different commodities and global economic factors are now overlapping each other and affecting each other. Okay, so we have to look at these things when we're going about placing our trades so we can understand and have context of seeing what we're seeing on the chart. Okay, now let's go ahead and break this down for what's going on. Okay, so we've basically been, since we've done crossed this threshold here around March 3rd, basically this was just the US dollar acting as a non-traditional safe haven currency. The reason why it's acting as a non-traditional safe haven currency because it is the major world superpower that is pushing sanctions against Russia. Okay, and it's traditionally not a safe haven currency. This is why I'm labeling a non-traditional safe haven currency. Okay. Now, what's happening is that as the Russian-Ukrainian conflict started to pick up, we did have increase in prices. Okay, of the U.S. dollar, it did start to gain value, but then as inflation started to pick up and gas prices started to pick up, we've been going down, coming up slightly and going down. And now we're basically in a very indecisive point right here, where the sole driver of what's going to happen with the US dollar is going to be oil prices and what's happening with inflation. Inflation is being handled in a proper way in which prices are starting to go down for consumers, and consumers are starting to spend more money in the stores. Then we'll see that the US economy will start to grow, get stronger, which means that the dollar will start to continue to go in the long position. Okay. This is also coupled with the reduction in gas prices at the pump, okay? But if we're in a situation where gas continues to increase, which causes consumers good prices to continue to increase, and everyday average Americans, taxpaying citizens have to continue to spend more money in the stores for everyday needs that they may for everyday needs that they need to survive. They can't spend money on the wants anymore. And also they have to keep spending money on higher gas prices. Then we will see a reduction in spending in the US economy, and we'll also see that the economy will start to shrink. The US dollar will start to devalue, and we will start to go down. Okay. Now we can go as far as down as here or here to this area here or even here before we start to see a pick up in price again. Okay. And let's see when was the last time oil was actually this low. I mean, excuse me, the dollar was actually this low. The dollar has not been that low for since 2020 when COVID came. Since COVID came, we've been recovering, and now we're in a situation where this inflation and high gas prices is looking like it's leading us into a recession. Okay, so the dollar can possibly get to a new low point it hasn't been in the last 2 years. Okay, but if we start to have inflation going towards a positive direction and we start getting into a situation in which inflation is being combated very effectively and very expeditiously, and we start to see oil prices being controlled and actually being reduced, and we can be in a situation where we're going up towards the long position and we can get as high as possibly this area here before we start to see price drop some, okay? So we can get as high as this area here, here, or even here, okay, before we start to see price turnover on the chart with the US dollar. But you have to understand the major factor that's going to be driving this is what's going on with oil and what's going on with inflation, being that oil, the prices of oil is what's catalyzing our inflation for inflation to grow um, even more, which is not good for our economy as a whole. Okay. And if the inflation is not tackled, and if the oil prices are not tackled, we will end up in a recession. Okay. Now, being that we are hearing a lot of talk from the Federal Reserve and the US government about really getting on these things, we can see a pickup in price initially, but don't be surprised if price starts to pick up some and then we get into this area and we have a drastic turnaround. Okay, because if we're starting to institute economic policies and measures in place that are more so band-aids to fix this problem that clearly needs surgery, then we're going to be in a situation where we will have price pick up some and then we will have a drastic turnaround. Okay, so going into this trading week, make sure you are truly paying attention to see what is going on with the economics and how it's affecting the US dollar. Okay, is you don't want to be in a situation where you're putting positions on a chart and then they reverse on you at a momentary split as soon as some economic news comes out. Okay. Now, just to review this one more time, if we start to have good news, positive news about inflation being combated and the oil prices coming down, then we will be in a situation where price will go towards the long position. But if oil prices continue to increase and inflation starts to continue to grow and gets even bigger and bigger and bigger, then we will continue down to the short side while looking more and more and more like recession is going to come about every day. All right. Hope this information was helpful for you guys. Happy trading.